Welcome to the Dream Huge podcast, where we'll talk with real estate investors, entrepreneurs, business leaders, athletes, and more to inspire you with their success stories so you can work hard, never give up, and dream huge. And now, let's start the show.
Yo, what is up, everybody? Welcome to the Dream Huge podcast, man. Super excited for this one today. Look, folks, we love talking with real estate folks, entrepreneurs, movers, shakers, influencers, and more. And hopefully these success stories will help to motivate and inspire you to also dream huge. And today we have our very special guest, Daniel R. Asbury Jr. He is the managing partner, co-founder at Keystone Capital Group. So we are happy and excited to have him on the program today. So Daniel, tell us a little bit about yourself and what it is that you do there at Keystone Capital.
Yeah, man. Thanks for having me. This will be a fun show. So, got into the investment fund space about 2020. Prior to that, I was a freight broker for about 10 years. I got into it right out of high school. Did a year at the University of Akron, and they hired me at a job fair. And college was not for me, man. Dropped out, wanted to start doing some stuff and making some money. So, started commuting to Cleveland every day, and I got into it right when The Wolf of Wall Street came out. I'm sure you're familiar. So it was very much the smile and dial, don't pick up your head until one kind of culture that I was in. I fell in love with it.
Yes.
Hustling, smiling and dialing, 100 calls a day. All cold. And, as the years went on, I just kind of woke up. I was like, man, I'm still making 100, 200 cold calls a day. And it was just like, oh my goodness, I can't do this forever. So, and then at that point, I was commuting to Canton, in end of 2019, early 2020. And we were in the Belden Tower downtown. And I kind of remember sitting there watching the COVID tracker in my office, and CEO walks in. He's like, I'm probably going to send you guys home for a few days, kind of see what happens, let this blow over. Long story short, we went remote. Everything basically stopped moving. And, I had to get my first hands-on job working in a factory here in Mansfield. Very humbling, 12, $13 an hour. They're the only people hiring. But I ended up getting COVID in November. And I remember sitting in my bed. I took a bite of my Thanksgiving meal, couldn't even taste it, whatever, wasn't hungry. And I just started playing around on the internet and Googling, who makes the most money. And it wasn't lawyers, wasn't doctors, it was fund managers. And I was like, man, I've heard of hedge funds and venture capital, but I didn't really know what it was or how to get into it. And I literally at that moment was like, I'm going to figure this out. And just started. I did a little research on YouTube. There's this kid out of Salt Lake that teaches people how to launch and scale funds. His name's Bridger Pennington. Shout out to Bridger if he ever hears this. Guy changed my life. But I just remember that week or so that I took off from COVID. I watched every single one of his free videos on YouTube multiple times over. And then over the following years, just self-taught, learned it inside and out. That's kind of where it's led me today. I don't know if you want to get into how we're structured currently or what I do within the fund, but that's kind of in a nutshell, just how I got to where I am.
Formal education will make you a living, but self-education will make you a fortune.
You
agree?
I like that. No, that is spot on, man. That is spot on.
You went out there and Googled, how can I make the most money?
Yep.
And figured out, okay, I need to raise capital, start a capital fund. And no one taught you that in school. No one formally taught you that. There's no courses on venture capitalism or raising capital in school. You seek that out yourself and you learned that yourself. So kudos to you. And you came from, though, somewhat of a sales background, which I think helped you tremendously.
Tremendously.
So what did you take from freight brokering and cold calling over 100 people a day, and how did you apply that into raising capital?
Dude, I'll be honest. It was just the law of averages. I mean, so the logistics industry is very cutthroat, very fast paced. But if you make 100 calls today, one of them could make you 10 grand in a month. You just don't know. It's all about timing. It's all about repetition. So I just was like, you know what? I'm going to get out there. And I ended up joining the Facebook group, Bridger's Facebook group. And I found a few people across the country, and we actually started a regulation crowd fund together. And it kind of eventually just kind of fizzled out and didn't exactly work out that like as well as I thought it would. And so after that would have been in like end of 2021. And dumped a bunch of money into the legal docs, all this stuff, flushed it down the drain. I told myself I don't want to do this again unless I can knock on my other partner's doors. So I was never going to go the cross country route. It had to be somebody local, and that's kind of when I approached some people here locally, and kind of started putting some webs out. And I had heard about this guy doing a bunch of development in the area. So I kind of took a step back and I was like, well, man, like I'd love to copy what this guy's doing. But that'll take me 10, 15 years to learn how to build a house. And, I just don't have that kind of time right now. So if you can't beat him, join him. And ended up, reaching out to him. It went really well. And we've talked basically every day since then. And, got our legal docs done in February and have raised a pretty big chunk of change since February, since opening up shop. So,
yeah.
But the communication and the law of averages is definitely the number one takeaway. Like just put it out there. Someone's going to bite, and then just start vetting. That's what I had to do. So,
yeah, we have another saying, whoever hears the most no's makes the most dough. Right?
Man, you're on fire today, man. That's awesome.
So, so many folks, especially in the sales business, are so desperate to hear those yeses, and they get so beat up by the no's. But if you switch your mindset and say, hey, I'm going to go out there and get told no today more than anybody else. I want 100 no's today. Yep. That's when I know I've had a successful day of, trying to help people out. Because ultimately that's what we do in sales. We're not selling anything per se. If we can help someone scratch an itch, if we can help someone solve their problem, we will be successful. So I'm going to try and help out 100 people today. And if I get 100 no's, man, I did it. So, and then like you said, it's the law of averages, and playing those numbers, because then eventually those will turn into yeses. If you're not taking action, you will get nothing.
Correct.
So great. Kudos to you for taking action. Okay. So moving on from the sales mindset to the actual capital, raising, what are you raising for? You don't have to get into specifics if you don't want to, but generally, what are you raising for? And are you still looking to raise more? And what type of payout structure do you have currently?
Yep. So we are single and multifamily development here in Richland County, primarily. We'll be here for the next probably 5 to 8 years. We'd love to take it statewide at some point. There are a few things we're trying to work out as far as modular homing that would absolutely catapult us. We are currently still raising. I don't know if so. I have a lot of local listeners. I'm sure the Trimble Road Tuttles landscaping plot used to be there. We're putting in condos there. Keystone's doing a few of those builds. So we are actively raising, and I'm more than happy to get into the weeds of our offering and the fund and stuff like that. If you want to, it's up to you. It might be a little granular for people, just kind of like how we have it set up as far as like return profile, things like that. I mean, that's kind of high level, but I didn't know how deep you wanted to get into that. So.
No, sure. I mean, we have investors that listen to this program. So let's say, can we just use general numbers? Hey, if I bring you $100,000.
Yeah. Yep. So
what's that
how
look like?
we have it set up is our minimum is 50,000. It's a Regulation D 506C structure. So we can only deal with accredited investors and up. But we are able to market certain offerings. So I can market Tuttles. I can say Tuttles. I can tell you we're putting up condos because that rule allows me to. But the caveat is we can only work with accredited and up. So 50,000 is the minimum.
Pause right there for new investors. What does that mean to be accredited?
Accredited means you've made $200,000 or more gross in the past 2 years, consecutively. $300,000 household 2 consecutive years, or $1 million net worth, excluding primary residence.
Gotcha. And what is the actual accreditation, am I saying that right, process? How do you vet those investors to be sure that they are accredited?
Yep. So there's 2 ways we do it. Our portal will actually self-accredit. So basically what you do is you just get your last 2 years tax returns, and then you upload them into the portal and it'll spit it out and give you an official accreditation letter. You can have your accountant pull one up for you, or you just send me your tax returns and I can verify you by hand myself.
Okay, sweet. But man, I got $5,000, Danny. I want in on the deal. I got $5,000. I didn't quite make a whole lot of money last year, but I want to invest 5. Are you interested in talking to me or not?
Man, if you're accredited, maybe. 5 doesn't really move the needle, but I mean, if you're accredited, like 5's kind of a slap in my face because we got a great product and great return profile. But yeah, I didn't want to take people's money that weren't savvy enough to really know what was going on. And it's not a dig at non-accredited people. I mean, if you make $180,000 a year, you make good money and you're probably pretty, that's not my rule. It's just the SEC, like that's accredited. So, but if you're Joe Schmo from Kokomo and, you got an extra $5,000 laying around in savings and you give it to me and then you need it 2 weeks later, sorry, Joe, can't do it. And I didn't want that headache. So that's why I chose accredited up.
Love it.
Yep.
So Richland County Development, love it. They just did the big study. We need at least 5,000 houses.
Yep.
We need 5,000 units in Richland County alone.
Yep.
Man, so even if you fully fund, we're still just scratching the surface here, folks. So that's the thing about real estate. There's enough to go around for everyone to be successful, especially in this market that we're in right now.
Yep.
And the more folks we have like you, Danny, and the more investors that get their money together, it's only a beautiful thing for the area. We need it. We have to have it. And people can make money providing it. So it's a win-win all the way around.
Yep.
So what type of return am I looking at?
Okay, so we have it set up where you get an 8% preferred on your money. So we don't make a dime until you make 8%. There's a 2-point catch-up. So the 9th and 10th percent go to the house. And then it's a 60-40 split in the investor's favor on the back end. That's the carried interest. Now, that is attractive for an investor because my income is heavily weighted on the performance of the product. So I'm not, taking a bunch of points up front and then just sitting on it hoping things work out and I still made some money and sorry, Mr. Investor, it is what it is. Like, I don't make money unless you do. So we're pretty competitive in that regard. And then we're projecting out between 25 and 30% IRR gross, which should come out to about a 10 to 12% cash on cash by the end, all said and done. So pretty aggressive. And then so far, what's been selling for me outside of the IRRs has been the story. I mean, like you just said, we're 5,000 doors short, and that'll be 7,500 by 2030. So we could spend the next 15 years here in Mansfield and barely make a dent. Right. But if we figure the modular out, which we've confirmed with a few lenders that is financeable, and the developer I'm working with will tell you the modular builds, they're done 10 times better than he could ever do them. There's no elements, HVAC, plumbing, electrical is all done in house. It's just drag and drop. So we would be able to exponentially grow just from a time perspective. Even if we have to give up some of the return profile, the time alone, like just volume, just banging them out, dragging and dropping them. So that's kind of in the next probably 24 to 36 months, we'll get that hammered out.
Fantastic. I think that sums it up pretty well. I mean, we're under 15 minutes here, but where and how can folks contact you if they're interested?
So the website's still under construction, but our portal is up and live. You can see some of the projects that we're currently funding and raising for. That is keystone-capital.investnext.com. So I'm sure you'll throw the link in there and stuff like that. But and then I'm on LinkedIn, I'm on Facebook, Daniel Asbury Jr. Come get a hold of me. Would love to talk to you if you're interested in investing at all, or if you just have any questions.
Give me that web address slowly again.
Yep, keystone-capital.investnext.com. That takes you right to our portal.
Is that through Appfolio?
InvestNext.
InvestNext is who it's through. Okay, which is probably similar.
That's the third word. Yeah, it's like Agora. There's a few other ones similar to that, but
excellent. Man, love it. Daniel Asbury is building up Keystone Capital very quickly here in Richland County. He's already had great success. Projects underway, many more projects to come. Folks, if you're interested in investing in the local real estate market and you want to do so passively, you want to do so without being an active landlord or without actually, like you said, building the house yourself. A great way to do that is through passive real estate investing. You can see it, you can touch it, you can walk through it, you can contribute to this community by investing passively through, Daniel Asbury and Keystone Capital. So any closing thoughts you want to leave us with, Daniel?
I did have one more anecdote if you would hear me. So the majority of our investors have been local here to Richland County. We did just get our first outside of Richland County a few weeks ago. He's an anesthesiologist from Cleveland, and I got in touch with him on LinkedIn. I won't give you his name or anything, but he's, high income earner, makes really good money doing what he does, working 50, 60-hour weeks, understands the importance of real estate and how to build wealth long-term, the legacy, what have you. Didn't have time to learn it. Didn't really care to learn it, and, was looking for more of a passive route, and found me on LinkedIn, and we were able to provide that for him. And, he's pretty happy with the progress so far. So there's, millions of people like that out there that if you're looking for a passive income stream, it's an alternative investment fund. That's the way to do it without learning it yourself.
What about folks that have want to use like a self-directed IRA?
Yep. You can invest through IRAs, pensions, anything you want. 1031s are pretty common. Mm-hmm. But yeah, IRAs for sure. We have a couple of those right now too.
Here's the other great thing about it. Get your money off of Wall Street and invest it right here on Main Street.
Amen.
Right?
Yep.
Why let all those Wall Street guys get rich?
Yeah.
You send your investment dollars out and they're gone, and you only see a small portion of that back, and the majority of it stays out there on the East Coast or wherever they are, New York City, who knows? Let's invest it right here in Richland County, and you can get the same, if not better, returns.
Yeah. And you can touch it. You can go to the site and see the progress. You can knock on my front door. I mean, everything's right here that you need.
Yeah, it's really cool. I'm happy that you're doing this, Daniel. I'm excited for you guys. And I will be spreading the word for you.
Appreciate it.
Yeah. Well, thank you, man. Any other final things, closing thoughts?
Nope. Go get it, killers. Let's go, man. I can't be out here doing this. Let's go. We need 10 more funds in Richland County. Let's go.
That's right. That's right. Love it. Daniel Asbury, Keystone Capital. Hey, thank you, Daniel. Appreciate your time today. Thank you, everyone, for watching and listening to the Dream Huge podcast. Get with Daniel Asbury if you want to invest passively in real estate. Keystone-capital.investnext.com. And I will also put the link on the pod as well. So thank you for watching, y'all. And as always, remember the rules. Work hard, never give up, and dream huge. Let's see the guns, Daniel. Boom. Yeah, buddy. Love it. Love it. Thank you, man. Appreciate you.
Thanks for having me, bro. This was fun.
Yep.
Thank you for listening to the Dream Huge podcast. Make sure you subscribe so you don't miss any future episodes. For more inspiring content, follow us on Instagram and Facebook at Dream Huge Realty and on TikTok at Dream Huge Inc. Until next time.